Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Lee Yoder, founder of Threefold Real Estate Investing and host of the Threefold Real Estate Investing podcast. Welcome to the Foundry, Lee.
Thanks, George. Thanks for having me. I'm excited to be here.
Awesome. Tell us, who is Lee?
Sure. I guess, well, as far as real estate, I jumped in because I wasn't happy with the job I had. So we jumped into real estate. Now we syndicate apartments. But first and foremost, I'm a Christ follower. I'm a father. I'm a husband. So my family is very important to me. I love real estate. It's something I'm very passionate about. I love doing the work. But I also, have priorities that are, far above real estate, being, my God, my wife, and my kids.
I love that. And that's very beautiful. And I understand that, that your religiosity has something to do with the name Threefold.
Yes, correct. Yeah. When we were trying to come up with a name, our faith is very important to us. We wanted to honor God and follow God in our business. So, our name was going to be something, along those lines. And actually somebody mentioned, using the word threefold. It's out of Ecclesiastes. You can see over this corner. I've got it behind me. A cord of three strands is not easily broken. And so what that means to us is, it's not just about us, and multifamily specifically is really a partnership business. So we've got to partner in so many different ways, but our biggest partners are investors that bring the capital to the deal and partner with us and enable us to take down a property. But then, as Christ followers and wanting to do more than just buy property and operate property and make money off of it, we consider God to be one of our partners and kind of our guiding light to make sure we're doing things right, doing right by other people, as God would have us do.
Yeah, I love that. And I feel that, that's something obviously is going to animate everything you do. So I really appreciate when people focus on maybe some higher calling in their business.
Mm-hmm.
I think it makes for obviously a better life, but I think it's also very good business.
Yeah, I would agree. Yeah, I agree.
Are you ready to build passive income through investing in multifamily real estate? Take the next step by heading to www.horizonmultifamily.com and click Get Started to schedule a call.
Yeah. And so unlike a lot of apartment investors, I guess you're not a real big city dweller, huh?
No, I'm not. No, we live kind of, we don't live too far outside of Cincinnati, but I don't know. I guess we live, 45 minutes or so. We live outside of Cincinnati, Ohio. We've got, almost 5 acres and some chickens and a pig and some bees and things like that, and looking to get more animals. So we like it out here and having some space for ourselves, but we'll drive into the city to buy our apartment buildings.
Yeah, well, that's awesome. So I got to ask you about the bees. How did you like The Honeybee by Jake and Gino? Did you get a chance to read that?
No, I didn't get to read that one yet. I really like Jake and Gino. I like a lot of the stuff they put out. So I think I would like, or the bee, is the honeybee or the beekeeper or something? Yeah, but whatever. I'm sure it's really good. I really like those guys.
Yeah, it was a great book, and it got me interested in bees, and I wanted to see
Really?
what they're telling us. How real is it? So I looked into those things like smoking the bees to sort of calm them down and all that, all the things they told me. Wow, it was really amazing how they weaved that into the business tale. So
That is.
totally recommend that book.
Okay. Yeah, I'll have to look that one up.
Awesome. Well, so tell us about your real estate market and how you picked that.
We just stayed local. So everything we've done is local. We actually live between Cincinnati and Dayton, Ohio, here in Southwest Ohio. They're your typical Midwest markets. What I mean by that is, we don't see the real high. We don't go so high, but we don't go so low. So kind of steady. And that's why a lot of people are getting attracted to the Midwest right now, because I think there's a lot of people out there that are wondering if we're at the peak, if we're at the high, and maybe we're going to come crashing down. If we do, those coastal cities and the really hot cities, they'll crash the farthest. as places like Cincinnati and Dayton for sure, we haven't gone so high. So, we'll experience the recession as well, but we won't crash so far. So that's one thing I really like about the market. It's still very affordable. Prices have gone crazy just like everywhere else. Rents have gone crazy just like everywhere else, but you can still buy for cash flow. And I am very much a cash flow buyer. I think everything we buy is going to most likely be worth a lot more in 5 years. I'm even more confident it's going to be worth a lot more in 10 years, but we're not buying it based. That's in our projections. Sure. We are telling our investors, hey, here's what we think it's going to be. And so we think if we were to sell or refinance, we're going to have a great return. Sure. But we don't need that. If the property doesn't go up in value, we are still going to cash flow. Our investors are still going to get a good return. It's just not going to be fantastic. But that's where we want to be, and that's you can still buy deals like that in this market where you can't in some other markets.
Right, I love it, and that's one of the reasons why I like the Midwest. I don't actually invest in the Midwest. I would like to be invested in the Midwest, but again, some of these markets that do see the high highs are generally the ones that see the lower of the lows. I know we had possibly a bad example of that recently because the Great Recession took real estate far lower than it had in relative terms, literally within a lifetime.
Yeah, absolutely. Yeah. And we probably won't have a crash exactly like that, but we could absolutely have a crash. Nobody knows what'll cause the next one. People didn't expect that in 08. They didn't expect the .com bubble to burst in 99. It happens. So you got to be ready for it.
Yeah, exactly. The idea of history not repeating itself, but rhyming. We know that the next one certainly will be surprising. Regardless, I don't expect it to look like the last one. I don't think many people do. But I do wonder if we're overlearning that lesson, or maybe we're underlearning it. Maybe more people should be piling into the Midwest.
Maybe. Yeah, maybe.
Yeah, awesome. So then, let's move on to entrepreneurship. So who was your greatest influence as an entrepreneur?
Man, that's a good question, George, because honestly, I didn't have many growing up. My grandpa was actually a logger. He had his own business. Everybody else, worked for companies, worked for the man, I guess. Took the poor dad route versus the rich dad poor dad book. So I didn't really have many examples. And even though my grandpa, kind of had his own little business, it didn't really impact me in that way. I would say, just once I started getting interested and feeling like I wanted to get into real estate, I still wasn't really thinking of myself as an entrepreneur because I had a full-time job. And I think I knew I wanted to get out of my job, but I still wasn't really thinking like I'm going to build a business. I'm going to be an entrepreneur. I'm going to, work for myself and have to pay myself. It was just kind of like, I'm going to get into real estate. So honestly, it was some of the mentors were the podcasts I listened to, people I heard on the podcast. Those would have been some of the mentors that were like, okay, they had a job and they got into real estate. They're just like me, but they kind of got the real estate going enough to where they could go and do that and be an entrepreneur in real estate. So that's why, I love podcasts like yours, George, where you can hear people come on and tell those stories and they can kind of be a mentor to you.
Awesome. And I guess for you, unlike a lot of people come into this business of multifamily syndication, and a lot of times they're looking at things more from the standpoint of like, yeah, I want to reach this level of wealth so that I don't have to work for the man anymore. But for you, I think it was more a matter of just wanting to spend more time with family and be more faith focused. Is that accurate?
Yeah, absolutely. George, I feel like I really got to experience almost both sides of the spectrum as far as work, and then trying to balance, the work-life balance, because I was climbing the corporate ladder for a while, and actually really enjoyed that work. I was challenged by it. I was fulfilled by it. So if I didn't have a family, I'd probably still be there. But I didn't have the capacity and the time and the energy to give to my wife and my kids and my faith what I really wanted to give to them. And you can do that for a while. There may be a season that you and your spouse decide that's the right thing. Maybe even pray about it and you feel like it's the right thing to do. Maybe people do that well over a long period of time, but my wife and I really felt like that God was calling us to something different. But then I went back to doing home health physical therapy because I'm a physical therapist by trade. And then I'm driving around to older folks' homes and doing therapy with them. And I was on the other end of the spectrum. This was a great job for my family. It paid us plenty. My wife didn't have to work. She stayed home with our kids because they were young, and then we started homeschooling them. So she could stay home. I could be single income, make plenty for our family. I had flexibility. I had plenty of capacity because it was not a stressful job at all. But George, the problem was I that's not for me. God gave me an entrepreneur's heart, so I was just bored out of my mind. I wasn't challenged. I wasn't fulfilled. And again, you can do that for a while, but you can't. For me, I can't do that for a career. So I knew pretty quick that's not going to work out. So found real estate, and I feel like not to over dramatize it and use hyperbole, but I felt like real estate could be kind of the perfect mix where, and just entrepreneurship in general. I think for people like me, maybe you're this way too, George, where I do want to work hard. I would be bored out of my mind if I didn't work. If I had all the money in the world, I would still be working on something, even if, maybe it was just, maybe it'd be, a nonprofit, not a nonprofit, but like a, just mission trips type stuff or whatever, right? Like just be on mission and do it pro bono. But I've got to work. And I want to enjoy it. I want to be fulfilled, but I still want to be home with my family. And it felt like if I get into real estate, I can work really hard at it, but I can control it, especially, if I'm an entrepreneur working for myself. And we can get into more, wherever you want to lead it, George. But the nice thing about that too, when you're an entrepreneur, and some people have this in their job, I definitely didn't, but you can do it in the hours that make sense for you. So I like to get up early. I can get some work in before my kids get up, so that allows me to work hard, to be challenged, to be fulfilled by my work, but not lose time with the kids because I can do it whenever I want. Not every part of my business, but most parts, right? So if I'm underwriting, I can underwrite properties whenever I want. So if I want to do it in the morning or at night when the kids are asleep, I can do that. If my wife's gone for a little bit, out doing something, I can do it then. But if I want to have lunch with my wife and the kids, or want to play in the middle of the day, or I need to stay home so my wife can run out, I can do that too. So it was a long answer, but that's what I love about real estate. And that's why it really works for us, because I get to work hard, but still really have a lot of flexibility to keep my priorities where I want them.
Awesome. So then continuing on real estate, I'd like to say that a great deal always has a great story behind it. Why don't you tell us a story of your favorite acquisition?
I'll just start with my first one, George. When I had flipped a house, I had flipped a duplex, but then I wanted to get into multifamily. So I found a 16-unit little apartment building. It's actually a pretty big building for 16 units because it used to be a school. So somebody came and converted this school because it was abandoned, not used anymore. They converted the school into a nursing home, and then somebody converted it to apartments. So it was apartments when I bought it, but it still had a cafeteria. Obviously it looked like a school, was on a school property. It was out in the middle of a cornfield outside of Dayton, but it was on LoopNet. It was listed for $440. I offered $350. This was back in 2019. So in the summer of 2019, we closed out in the fall. I offered $350. They countered. I stuck with $350. Got it for that. So got it pretty cheap. It needed a lot of work. The roof was leaking. We actually negotiated a large amount of cash back at closing from the sellers to put on a new roof. So we put on a new roof, renovated a bunch of at least 7 of the units, I think. Redid the hallways and all that. Really turned the property around. And then went full cycle on it and sold it in just over a year and made a great profit for us. And that was just a joint venture. That one's neat too, because I brought my in-laws in on it who had never invested in anything. Honestly, they have like a 401k and they just put all their money in their savings. So it was really fun to see them take a chance with us and then them get to see a big return too. I also brought my mentor in on that deal. So that's one of my favorite deals and probably always will be.
Cool. I love it. So the first one being one of your favorites. Awesome. Well, what would you say as you scale up your business has been the most important lesson in leadership that you've learned? And obviously you've been a leader, not only in your investment career, but also in your W-2.
Yeah, that's something I've struggled with, George. I do consider myself kind of a natural leader, but I'm not good at management. And when you're leading a company and you're an entrepreneur and you start bringing on other people, you need to have some management skills, and you need to do a good job with management, I think. And that's something I've really struggled with. So as the leader of Threefold, even when I, brought my partner in, and then we've added some other pieces, but mostly just family, like there's stuff my wife does. I think it's important to give people clear guidelines. If you're the leader and you're the one kind of forging the path and you have this idea, sometimes it's in my head, but I'm not doing a good job of telling the others on my team, the ones that are actually doing that task, exactly, not just what I want, because it might be, they might have some of their own ideas, but if it's me kind of directing, I need to really explain to them what I'm thinking and where we need to go. And then maybe we talk through that. Maybe they have some other ideas, but we've got to get on the same page, because otherwise they'll take that and do it, and they won't feel comfortable with it because I didn't give them enough direction. But then when they're done, I might not be happy with it, and it's not as helpful as it could have been if I'd have given them more direction. So being clear with guidelines and where I think we're headed, and just getting on the same page.
Awesome. So it sounds like you're more of the visionary leader. Looks like this is possibly why you find entrepreneurship to be more exciting.
For sure. Yeah, absolutely. Yeah, I found that term. I listened to a speaker that talked about how Disney separates their employees, and some of them are visionaries. And when I heard that whole thing, I was like, yes, okay, that's me. I'm a visionary. All right. I feel better about, wanting to dream and think about these things all the time. Like there's a term for it. I feel better about it now.
Exactly. And obviously in a corporate environment, people who are good at dealing with risk and finding what can go wrong are often very highly prized. Sometimes I find that I like the world of entrepreneurship because it's really all on the plus side. You got to look out for the negatives, right? You got to look out for risk, but it's, until you get some points on the board, it doesn't mean anything. And you get to really focus on what I would call the more positive end of business.
Sure. Yeah, I've certainly enjoyed it. That's been my experience, George.
Awesome. Now, tell us about your podcast. Have you felt that your podcast has been valuable in building your business, and in what way? If not, maybe you can give us some advice, because I'm sure a lot of people out here that are listening to this are podcasters themselves.
Yeah, I have a podcast. I've been doing it for, coming up on 2 years. In a couple months, I've been doing it for 2 years. It's called the Threefold Real Estate Investing Podcast. We focus on multifamily real estate, but we focus on real estate, but also faith and family. So when I bring a guest on, I want to hear about their real estate journey and the apartments they've bought and how they've built their team. A lot of the questions you've been asking, George, but I also want to know, how is real estate, and you've kind of gotten this already a little bit in this interview, George, but I want to know how real estate has affected their family, and maybe specifically their faith. Not everybody we have on is a person of faith, but to me, George, it's no good to get into real estate or any type of entrepreneurship and build this business and have success if it means that your life sucks, right? Like if it doesn't benefit you in your life, then that was no good. You're going to be one of those people who get to the end of your life and you have all this money, but you've got no friends, you've got no family. And so for me, if you get into real estate, you get into entrepreneurship, it better, again, there's seasons for things, so it might be tough for a while, but it better start to improve your faith, your walk with Christ, if you're a Christ follower, and improve your relationship with your wife, give you more time to date your wife and go on dates and enhance that relationship, and more time to spend with your kids and raise them up in the right way and things like that. So we focus on that in the podcast. I would say, George, it has definitely been helpful. I don't think a lot of people hear about me and listen to my podcast and then become an investor just from that. But I do think there are a lot of people that see what we're doing, they get interested, they listen to my podcast, learn a little bit more about me, a little bit more about Threefold, get a little bit more comfortable, and then they're interested in investing. So it kind of validates what we're doing. I think the podcast gives you some just some validation among people, makes you look professional, things like that. And then it's been awesome for networking. I mean, been doing it for 2 years, so 104 weeks coming here in a couple months will be it. So I've talked to over 100 other investors. It's been invaluable. Made some great connections, learned a ton from those people. Got referrals from them, just so many things. So absolutely, it's been great having a podcast.
Awesome, exciting, and also a little heartening, because it can be hard knowing whether you're going to get that lift out of the podcast or not. I think feel that they're getting that and some not. But I like the focus. I really appreciate that you are focusing on, whether people are happy, whether it's enriching their walk with Christ and with their family. And pretty commonplace observation, I'll say, but I'll say it anyway, that it's really hard to be good at something you're not enjoying. And
For sure. Yeah,
personal
absolutely.
story, when I went to science, I asked, like, what makes a great scientist? And I was completely surprised by the answer, being curiosity, right? If you're curious, you will love doing experiments. It'll be very enriching to you. And if you're not, it doesn't really matter so much how intelligent you are, what is your tactical skill, even what is your work ethic, because it's just really hard to ask the right questions and to just enjoy the march forward.
Right. Makes total sense. Yeah, I like that.
Yeah. Well, how about moving on to books that have forged you as a leader and an entrepreneur?
Yeah, specific to real estate, you can see behind me the Rich Dad Poor Dad. That's what gave me that mindset shift and made me, think, wow, there's a whole different way to do work, to do this life. That was big. Actually, the one beside The Perfect Investment, that was really helped turn me on to multifamily. The book, I think it's actually maybe it's up there. Joe Fairless wrote a book called Best Ever Apartment Syndication Book. If you want to get into apartment syndication, that's your textbook. So that's a great book. That's really helped me. That's what convinced me to start a podcast. There's so much in that book that it just kind of tells you step by step. Now, Joe Fairless built a massive business. Maybe you don't want to do that, so you might not follow every step, but there's so much good stuff in there. Gosh, I like reading just business books in general. Those would be some of the big ones in real estate. I need to get more into the ones, George, maybe you have some recommendations, but building a business. Because at first it just felt like, at first I really was just kind of doing this myself when I bought the small multis. But now we're starting to really kind of more build a business. So I haven't read the book Traction, and I hear so many people recommend that one. So I want to read Traction and books like that kind of help actually build a business.
Yeah, awesome. And I have to say, Best Ever Real Estate Syndication book. That's the reason why we're here today, because he talks so much about the importance of building a thought leadership program. I think it's great advice because it's something you can do literally in parallel with everything else you're doing. Life is not always about either or. And one of the things I've always focused on is when you look at a couple of options or a couple of paths you can go on, if you can do things in parallel, you might as well, because you're going to go a lot further. Don't wait until A is done to start B, unless there's a dependency.
Yeah, good point. Yeah, and I've experienced that with the podcast. I have that going, but doing so many other things, but the podcast really marries well with all those other things.
Yeah, awesome. So then, if you could enlighten our audience by telling us what is some of the best advice that you've gotten in real estate or business, and what is some of the worst advice that you've gotten, or maybe something you'd like to help people avoid, some sort of a pitfall, for example.
Yeah, I think some of the best advice, I'll say another really good book is called The Compound Effect. And, the advice I guess I got out of that book is you've really got to stick with something and stay consistent for a long time, often before you see any results at all. But what you don't realize is the whole time you're doing that, you're compounding all this effort, all this energy, all these things that are putting in, and it's going to end up resulting in this big, goal that you have at the end. But the whole time, it's really hard to see any victory. And buying apartment buildings is a perfect example. If you set out to buy an apartment building and you haven't done anything, like it's probably going to take you a year to do that. So after 10 months, you've called brokers, you've called investors, maybe you started a podcast, started a thought leadership platform, done all the right things, underwritten 200 deals, done all these things. And after 11 and a half months, you have nothing as far as like units. You still have 0 units. It's not that you have nothing. You have a podcast, you have underwriting skills, you have broker relationships. That's what you have to focus on, is that you actually do have a lot. You build up a ton of momentum. Just because after 11 and a half months, you have 0 units doesn't mean you haven't seen any success. And I think that's good advice for anybody trying to start something, any kind of entrepreneur, but certainly if you're trying to buy apartment buildings, because, a couple weeks later at month 12, that's when you get your apartment building, and now you've got 100 units. Well, you didn't buy those 100 units just on one day. it's everything you did over the past year that got you there. So I think that's some good advice out of that book, that how the compound effect works and how you need to stay. If you can just stay consistent, you got to keep doing it. Joe Fairless is such an incredible example. He did a podcast for every day, for years. And I forget what he says, but like, it was at least 6 months. I mean, doing it every day and seeing like no results. But he hadn't given the compound effect long enough to take effect. And then all of a sudden, 12 months, he's off to the moon. So that's one piece of good advice. I would say bad advice would be I think what a lot of people are getting is this idea that, I don't want to just say like real estate prices always go up. That's too simple. But just that if you buy in a good area and you buy a good asset and you manage it well, it'll work out. And I really, it may, if we, over the past few years, for sure, even over the past 10 years, that's probably been true, but that's not always true. I mean, if rents go down and you think just because you bought in a good area and just because, you're managing it well, doesn't mean you can't, lose the property. You can. If you overpay for it and your mortgage is too high and you have too little margin, things can really go south. Your investors will get no returns, and you can lose a property if you overpay. And I think there's some people out there just a little too confident that, if I buy in a good area, and we're honest people and we run the property well, it'll be fine no matter what I pay. And I think that's bad advice.
Yeah, I love that. And it's part of the symptoms of having been in such a long expansion. I believe that single family homes bottomed out in terms of price 2011. So we're literally a decade into this expansion. And as Warren Buffett likes to say, it's not until the tide goes out that you get to find out who's been swimming naked.
Exactly. Yeah. And I worry about people. So yeah, just so I guess that's taking some bad advice and maybe trying to give people good advice.
Yeah, exactly. So yeah, definitely going to be some people washed out when we get to that next, whatever it is. I do wonder, was this recession that we recently went through, was that a real recession? Does that count? Or are we about to get hit by another one?
Yeah, I don't think that counts. I think we papered over it so fast that all that pain, I still think we're going to experience that pain.
I just love the way you said papered over, because I gather that you might be an inflation hawk.
Yeah, I wonder. I listened to some different guys. I actually think inflation could be transitory, and we still see a crash. So I don't think it has to be an inflationary crash. I think absolutely we could go back to a deflationary crash like we've had in the past.
Yeah, well, fascinating. Definitely keeping my eyes on the economic events and happenings, because definitely with all the money that's been printed, there has got to be a bubble somewhere. And I kind of suspect that there's a bubble everywhere, and it's just a matter of what is least overinflated at this moment.
Yeah. I wouldn't argue with that.
Awesome. Well, how about telling us how you had to grow or change to reach your current level of success?
Oh yeah, a lot. One real valuable lesson I learned that I felt like God really wanted to teach me through this was to slow down a little bit. And I really learned that through my wife. My wife is much more risk adverse than I am, and wants to move slower. So that bothers me because I just want to move really fast. But what's been really neat, George, is our journey together in real estate has shown me that sometimes taking less steps allows you to take much bigger steps. In slowing down and thinking through things and stepping back and looking kind of at your business, people say you need to work on your business, not in your business. So sometimes stepping back and slowing down allows you to not just be efficient and do a bunch of things, but to be effective. And my goal was always to buy apartment buildings. I still started by flipping a house. And I think that's okay that I started there. But what my wife helped me do by kind of forcing me to slow down, because gosh, by the time we got this flip going, I was loving it. I'm like, let's get another one going. Right after we sold, I was like, let's do another one. And she's like, no, this is not what you told me. This doesn't seem like the rich dad, poor dad. Hey, we're going to collect passive income. this seems like another job. And it was. So we slowed down, I rethought it, and we bought a duplex next. Okay, so then we got to see that some of that passive income. It was basically a flip, but we rented it for a while. We managed it, and our income was more than our expenses. So we got to see the power of real estate of passive income or residual income, where you're making money every month. And as long as we own that property, we would have made money. We sold it, but then I didn't like managing it, so I wanted to go bigger, so I could get some good property management. So we did that next. So even our third deal was a 16 unit, and I know people. Michael Blanc, you mentioned him, I think before we jumped on, he always says how he had to flip 36 homes before he realized that flipping is not investing. Luckily, again, that's why he's one of my mentors, because I'm listening to him, George, while I'm flipping a house, and I'm going, yep, I see what you're saying. This doesn't seem like investing. This seems like another job. But it was also because I slowed down, and my wife said, hey, we're not doing another flip. Let's reevaluate. Let's think about this. And if she wouldn't have done that, George, I would have jumped in and done another one. So that's a way I had to grow, and it's been so beneficial. And so many times I didn't think we were moving fast enough, and yet it was actually in slowing down and recalibrating and making sure we're being effective, not just efficient, doing as much as we can. It's actually catapulted our business. We've moved so much further, so much faster than I would have even dreamed. And honestly, if I would have done even more deals and worked harder, we wouldn't be where we're at today. I don't think we would have, we flipped a house. We started that in 2017. And, exactly 4 years later, we bought a 96 unit apartment building, and we're at 188 units. And honestly, if my wife would have let me move faster and do more deals, we wouldn't be here. I probably would have flipped 10 houses, then maybe done a few duplexes or something. It just would have taken us longer, but it's because we slowed down that we moved faster, which seems, like it doesn't make sense, but it certainly does.
Awesome. Well, I love that. One flip was enough. That could be your slogan. And I know there's a lot of real estate investors, myself included, that maybe spent a little longer in the single family space than we should have.
Yep, I know some too. Absolutely.
Now, what about getting your spouse involved? Do you have any tips for that, or did things just sort of develop organically?
Yeah, that wasn't easy, George. It didn't just happen. One, I just think, we actually put out a video into the podcast episode. I think we titled it, "What do you do when your wife identifies with the poor dad?" Because I had my wife read Rich Dad Poor Dad, and she's like, she said, "Okay, I get why you like this, but I don't I don't want to be a rich dad. I like the poor dad route." And I'm like, what? How could that's wrong? Everybody's supposed to pick the rich dad route, but the truth of it is, not everybody's an entrepreneur. Not everybody wants to go the rich dad route. I mean, I think it's so much better, but there is more risk involved in that most of the time. I mean, my wife's an RN. I know people say, "Oh, you can lose your job anytime," but my wife, she could be an RN and I could be a PT, and we could do that the rest of our lives. It's very unlikely that we would ever, not be able to find a job. So it is a little more risky. And so honestly, George, I would just say I had to give her time. I had to let her see real estate, and we had to take, what I thought were small steps, but just maybe fewer steps and move slower and just let her see it. I mean, my wife trusts me, but she had no reason to trust me as a real estate investor when we got started, because I wasn't a real estate investor yet. She had no reason to trust me as an apartment syndicator because I was syndicating my first apartment. So you've got to give them time. I think that's it. And that's not the answer I wanted. That's probably not the answer other people wanted, but start small, maybe partner, maybe do some of the things that would make your spouse feel more comfortable, because those are probably some wise things to do anyway. I try, and I think God often puts on my heart to honor my wife, but also take what she's thinking as wisdom, not just, a roadblock, because again, it was because we followed her pace more than mine that we actually moved much further, faster. So I think you got to give them time and take what they're thinking as wise counsel as well. There's not just one way to do things. And there's wisdom in your spouse, even if they're not on board.
That's awesome. And you have taken some pretty big steps in a pretty short period of time, up to 188 units. So congratulations on that, and great advice.
Thank you.
I know that's certainly one of my questions, is how to get the spouse more involved and wanting to do it in a way that's going to build the relationship. But I love it. How about sending us out with a heartwarming story from your entrepreneurial journey.
Yeah, sure. I kind of mentioned earlier that my in-laws got in on our first investment, and that was really cool. I mean, my wife, I kind of explained like that, they were not investors. They have their house paid off. They have a bunch of money in the savings account. Like they're just as safe as can be. So that's how my wife grew up. And so that's why she struggled so much with me wanting to take risks. I mean, it's just not how she was raised, and her family didn't necessarily think it was a good idea, because they're just also risk adverse. But showing them what we were doing and them kind of getting to see it, they were our first investor on our first multifamily property, and we did really well, and so they did really well. So that was really cool to get to see somebody that thinks investing, pulling your money out of a bank and putting it into a property and investing is just super risky. To get to see them do really well with us in that. I mean, they've invested with us 3 times since then. And basically, they've invested with us pretty much on every deal, and have continued to do really well. It's been great because this is a whole other thing, but I hate what the Fed is doing. I hate that people can't save money. It makes no sense to save money. I mean, Robert Kiyosaki says, if you're a saver, you're a loser. And it's not because it's not smart to save. I still think it's smart to save money, but it's because the Fed is telling you they're going to inflate away your money. And the bank is telling you, we're going to give you no return on your money. It wasn't always like that, but it is today. So I love getting to see people put their money to work like you should. You used to be able to get a good return on your money in a savings account, but you can't anymore. So I like to see people benefit from that. So honestly, George, is part of what made me want to be an apartment syndicator and bring more people in, let more people experience that, because it's really fun to get to see people let their money work for them instead of just them, trading more time for money.
I love it. And that is truly a heartwarming story. Great that you were able to bring the in-laws along and really to help people see the value of those passive income streams. Well, Lee, I want to thank you for coming on to the Foundery. This has been a very exciting and heartwarming interview.
Thanks, George. It's been a pleasure. Thanks for having me on.